Good morning, ladies and gentlemen. It is 9:02 a.m., October 9th, 2017. This is James from Dividend Stock Talk, where we talk about dividend stocks and investing for weekly and monthly cash flow. Let's get this thing up here so we can see what the date is. Here we go, right there. This is the second week of the fourth quarter. And the fourth quarter usually represents the largest gains. That's where traditionally the largest gains come from in the fourth quarter. I don't know why people getting settled in for the cold weather or whatever reason it is. They feel they need to get online and start doing their own investing. Who knows? But a lot of stocks, a large amount of stocks, go up in the fourth quarter. And we are looking to take advantage of that now. Okay, all that being said, let's jump on in and see what we're doing. Okay. Now, if you were with us last week, you noticed that we had quite an interesting situation. We were at, on Thursday, we had 10 positions in every single one but one. All right, so 9 out of 10 positions were all in a positive. There was only one we needed to keep an eye on. And what happened Friday? Huge amounts of disappointment. A lot of our stocks went down. So we, over the weekend, happened to be the proud owner of a bunch of stocks that we really don't have any need for, so to speak. So we have several choices of what we could do. And we're going to go through them one at a time to show you where we are. Now, let's start off by looking at CVS, the first one on our list. CVS. CVS started out the year at 87, took about a week or so for it to find the high of 88, 84, somewhere in that area. Actually, 88.92 was the high of the year for CVS. She stair steps down to find the low of the year a couple of weeks later. Now that's kind of neat. You get the high of the year, and then two or 3 weeks later, you get the low of the year, 69.19. So you get the high of 89, just about, and the low of 69. That's a $20 difference. That's a 25% fluctuation from the high to the low. Anyway, that being said, as you can plainly see, after all that turmoil is done, about a month and a half, she settles into a nice trading range of between 76 and 81, somewhere in that area. But she goes sideways for the whole year. And then the last couple of weeks, she was at just around 84, and she settled into right around 80, kind of going sideways in that area. And then on Friday, for some strange reason, she opens up right at 80.39, and she drops. She hits a low for the day on Friday of 76.54, but settled in at 76.92 for the day. Now, my assumption is, after reading some of the news, that a lot of this had to do with the new opiate drugs coming out. CVS wants to not be on the forefront of the problem of the addiction of opiates. So I can understand them not wanting to be associated with that. They want to keep things under control, and people don't want to be associated with the abuse of a controlled substance. I can understand it. It's a business decision. It could be profitable for them, in the long run. But as of Friday, there appeared to have been a lot of panic, and as you can see, she drops from 80 down to 76, which is not a huge drop. What is it, 4 points? Not huge, not even like 1 or 2%. But that being said, we have a covered call for CVS. We bought it at 80.32, and the only way for us to make money is we're going to have to wait for the market to open to find out where it opens at, to see what the market maker is actually thinking. Because once we find out what the market maker is thinking, he has the best idea of what's going on with the company. I mean, even more so than the CEO or the CFO. It's the market maker, because the market maker has to do all this stuff, because that's how he does his business. All right, so anyway, we're going to wait on CVS to open up first before we find out what the market maker has in plan. So that being said, let's move on to the next on our list, with DG, Dollar General. Now, we got Dollar General. I think we ended up buying it at 80, wasn't it? Yep, we got Dollar General at 80, so let's take a look at the charts. DG. Okay, Dollar General starts out the year right around 69, and just like CVS, within a couple of weeks, finds a low of 67, trades in that area for about a month and a half. And then, just like CVS, she goes from the low a couple of weeks later to almost the high of the year. The high of the year was actually 82.41, that area. But at the beginning of the year, she got up to 80, and that was the high of the year up to the last couple of weeks. Okay, so after she hits that, she starts, stair-stepping all over the place, and kind of like a sideways market. She's traveling between the 68 area all the way up to the 76 area, which is almost a $9, $10 spread. And she trades there for almost the whole year. And then the last 2 weeks, she breaks out of that and does find the high of the year of 82.38. She bounces off the high of the year, and Friday, just like CVS, she has a down day. She opened up at 80.89 and closed at 80.33. Now, we have Dollar General at 80. Now, we missed on making the 25% return on our spread trade, but we can still do. We have an option of doing a covered call or just selling it outright. So if you look at my account, you can see 1, 2, 3, 4, 5. Oh, I'm sorry, like 4. Yeah, 1, 2, 3, 4. I have 4 positions that each have 5,000 shares, and I know that I don't have the funds to carry all this, so I have to get rid of them today or tomorrow. So why not? I bought it at 80. Let's sell it for 80.38. I didn't make a huge amount on the on the spread trade. I did make a little bit off of it because I did buy the 80 call, and I did sell the 80.50 call. The 80.50 call expired worthless, which means I get to keep all that money, and I end up buying Dollar General at 80. So it kind of like on the favorable side. There's no other way of looking at it, because you buy the 80 call, which gives me the right to buy it at 80. All right. She settled at 80.38, so it means I'm buying it at 80.38, and it settles at 80. Sorry. I bought it at 80 because remember, when you do a spread, you buy the option to purchase it, and then you also sell the option to purchase it at a higher number. Okay, yeah, I would have made a 25% return, which was, as I recall, I don't even remember. I'm gonna have to go back to the other videos and see exactly what that would have been. But 25% is not a bad return for 4 or 5 days. But I didn't make the 25%. What I did end up doing was I made the money off of the 80.50 spread, the 80.50 call that I sold, because it had expired worthless. I sold it, and then it expired worthless, so I got to keep that money. And then I turn around and I buy Dollar General at 80. Now it's at 80.83, no, 80.38. So I'm hoping that the market maker opens it above 80.33, because that way I can see how much of a profit I can make off of it. Lowe's is next on the list, LOW. Now, Lowe's is another one I did a covered call on, just for showing people what the covered calls actually look like. Lowe's starts out the year at 71. Took just like CVS and Dollar General, took a couple of weeks for it to find the low of the year at 65. From there, it stair-steps on up to the high of the year about 6 months later to 86.25. Drops back down to a trading range of 76, and goes there for about 3 or 4 months, and then breaks out to settle in at the 81, 82 area. Now, she had 6 up days in a row, so there had to be profit taking. I mean, that's all you can take it, unless there was something going on in the market. It seems like everything was a down day on Friday. It happens, not every Friday is glorious. You have to have your bad Fridays in order to have your good Fridays. Okay, so we're down a little bit with Lowe's. Now we're into Lowe's at 82.32. So we're going to look to sell the 82.50, what do you call it, covered call. So that way we get a little bit of money after we sell it. Now we did get some money last week for selling the 8250. What do you call that? 8250 caller, covered call. Anyway, the 8250 covered call, we made money on that last week. This week we're going to look through the same, but we're not going to do anything on it today because we don't know where she's going to open up. And by not knowing where she's going to open up, we have no idea what the market maker has in mind. Okay, that's Lowe's. Let's jump over to Oracle, another company we got the privilege of buying it for less. Okay, Oracle settled at 48.40, but she started out the year right around 38. Traveled for about 4 months in the 38, 39 area. Jumps up and tries 42 for a month. Jumps up again, tries 45 for about 4 months. From the 45, 46 area, she gaps up to 50. That's like almost a 10% increase overnight, which all investors love to be on the positive side of the gaps, on the gap up. Not everybody likes to be in the gap down like this right here. After traveling and finding the high of the year of 52.98, almost hitting 53, she gaps down. Now, granted, you get favorable gap up. You got one here, which she jumped from 43 to 45, not a huge amount, a 5% gap up. And then a couple of months later, she gaps up from 46 to 50, right around 51 or so. And that's a favorable 10% gap up. But, it's not sunshine and flowers every day, so she gaps down one week and she settles in around 48. All right, she's at 48, and we got 5,000 shares at 48. So she actually settled in at 48.40. Now remember, just like we did with Dollar General, we bought the 48 call and we sold the 48.50. Now we're only off by 8 cents or 10 cents on the spread. So we did make money off of the 48.50 that we sold, but now we get to sell Oracle for whatever it opens up, and we're going to hang around for the opening and see where everything goes. So hopefully we'll answer any questions if anybody has any. Now I could theoretically, let's jump in and take a look at Oracle. I could do the covered call because, as you can see, she's between, the bid is 48.42 and the ask is 48.55. So I could theoretically sell the 48s, which is what I bought it for, at 48 cents a piece. So that's like selling it for 48.48. But I can't do that until Friday. So that kind of ties me up with the money that I can make this week and just be stuck with the 48 cents over 5,000 shares, which is right around $2,200, $2,300. Or why not? Why not make an extra $2,400 off of each stock by selling the at the money call for 50 cents or somewhere in that area? But like I said earlier, I can't carry all 4 of these into the week, so it means I have to get rid of most of them today. All right. That being said, with Oracle, we're looking to sell it, at the when it opens up, hopefully at 42.42. And that means I make a nice little profit off of that. All right, AT&T, another one we got a little bit interesting with. Okay, AT&T starts the year at 38.92. Just like the other stocks, travels for a couple of weeks, actually about a week or so, and then finds a low of the year. Now this one seems to have a triple bottom right at the 36 area, which means 36 seems to be support. So does AT&T go below 36? Not this year, it didn't. She hit the 36.11 a couple weeks after the beginning of the year, and then just like the other stocks, within a month or so, she finds the high of the year at 43. Now going from 36 to 43, that's only a $7 move, which is a little bit over 10%. Actually closer to 15. All right, anyway. Travels for a couple of months at the 41 area and slowly steps down to test out that resistance again at the $36 area. So you have a triple bottom here at the 35, 36 area. She bounces off of that, hits, what is this, 38, 39.80, and then on Friday, just like everything else, gaps down and has a down day. So she ends up closing up at 38.59, and where do we have AT&T? We have AT&T at 38.50. So we only got 9 cents into the money on this one. So we're going to be selling it at the money, either selling it at the money call or selling it right where it is at the open. So we're going to find out where she's going to open up in about 12 minutes. So hang out with me for about 12 minutes so we can find out what's going on, because I'm going to take a look at this last one, Verizon, and then we're going to look at what stocks we have to trade this week, because it's not going to take me long to eliminate these four, actually it's $20,000 worth of shares of these four companies. They should clear out first thing this morning, which then will allow me to jump in and make any trades afterwards. So I'm not getting in at the opening this week unless I do something tomorrow or Wednesday, which I normally will do. But I want to get in and find out what these companies are going to do, liquidate them, take my profit, smile happily as I trot on down to the bank, however you want to say it. Anyway, that being said, let's jump on and take a look at Verizon. Verizon starts up the year at 49.50. Within a week or so, drops down and finds 46. From 46, a couple months later, just like everything else so far, finds the high of the year at 54.80. From the 54.80, she takes about a year or so, almost a whole year, to drop down to the low of 42. Now from 42, she settles into the trading range of 48 for about a month and a half, then stair steps up to 49, and she's right at the 48, 49 area, which she's been at for the last couple of weeks. Now, we got Verizon at 48.50. Okay? Now, she closed at 48.81. Is that right? Okay, we're at 48.50. And the mark at the moment is 48.81. So we could sell it now and make a nice little profit. So we're going to find out exactly where the market opens up. And at this moment in time, we're opening up with 66,367, which, if you think about it, it's not bad. Start out the first quarter, and I'm not quite sure we're going to hit triple digits this year, but it ought to be fun to see how close we can get. All right, all that being said, that's where we stand at this moment in time. Now let's take a look at a couple other stocks and find out where they stand for today's trading. Now we are at the 9th, so we're going to be looking at companies on the week of the 16th and the week of the 23rd. We got CVS and Lowe's, which are on the week of the 23rd. And on the week of the 16th, we have EOG, ACN, APA, and Colgate-Palmolive. Now, you may ask yourself, are there more companies than this? Yes, there are. There's a whole bunch of them. Let's go in, clear the filter. Now, for the week of the 16th, we have 10, 18, 27, 39, 46. We have 46 companies offering out dividends for the week of the 16th. Okay, the week of the 23rd, we got 4, 7, 9, 15, 18. That's not very much. That's not a whole heck of a lot. Anyway, that's who we got, and don't get me wrong. There might be nice companies or great companies to invest in, but I'm only looking for those that have weekly options, because on this account, I'm looking for those companies that will give me a weekly cash flow. Now we're averaging over 1% per week, which is great. That's my goal, is to keep it at 1% per week. It should give me roughly a little bit over 50% per year, which is unheard of in the investing world, to get 50% return. All right, let's jump back to we can actually do some trades. That's right. All right, so we'll look at EOG. Now, we looked at EOG last week, and we actually invested in EOG. So let's quickly take a look at where are we with EOG. EOG right here. We are down $120 for the year trading with EOG. So let's see if we can turn that loss into a positive by doing another spread this week. So that would be nice because I don't like losses. So we're going to trade EOG. First, let's bring it up. Let's see what the chart looks like. EOG. Okay. EOG starts out at 96. Within a couple of weeks, gets to a low of 89. Jumps back up, just like everyone else. About a month and a half later, finds the high of the year around 109. And then slowly tumbles down to hit the low or resistance of 81, right on 81, 82. Bounces off that, settling into the 96 area, which is not a bad area to be in. So let's take a look and see if we can make some money off of EOG this week. All right. And we want to do the option chain, click onto the spreads, left click, and we want to look at the verticals. The vertical is going to give us a debit spread, or because if we're on the other side, see, it depends on which side you buy and sell. You know, if I'm buying over here, it's a debit spread. If I'm selling over here, it's a credit spread. Kind of strange. And if I'm over here, it's a debit spread, and if I'm over here, it's a credit spread. Really strange. Anyway, that all being said, we're going to look at the 95.96 because she settled in at 96.19, and we want to have one of those favorable trades. And ooh, that looks good. 64 cents for a dollar move. So that's like paying 64 cents for a dollar. If you're going to go to the bank and say, hey, I want to give you 64 cents and you give me a dollar. How many times do you want to do that? I want to do a bunch. But the catch is the stock has to stay above 96 the end of Friday. Okay, so before we get into anything, let's find out what she normally does. By doing that, we want to go to the standard chart, take a look at that, look at the seasonality, and where does she go usually this time of year? Because you got the dividend coming up next week. All right. Today is the 9th, and by the 13th, we want to be out. So where is it going to be around the 13th? 10, 13, looks like a little bit of a down. So here's where she is now. And that is pretty clear to see that this is going to go up for another day or so. Now, I'm not saying this is exactly what it's going to do. This is what it's done in the past, so there's a good probability that it'll probably do the same thing. Because if you think about it, corporations are like miniature worlds, okay? You have your nucleus or your center of the universe in EOG, which just so happens to be corporate executives. And then you have your secretaries, you have your office workers, you have your actual workers, and it's a little community. And day after day, week after week, year after year, all they do is they come in, they do their work. They come in, they do their work over and over and over again. So there's a good chance that they can do the exact same thing this week and next week and the week after, and they can continue like, you know, business as usual, because that's what businesses do. Business as usual. You know, same thing, day in, day out, same people calling, same people coming into work, blah, blah, yada, yada, yada. So that's why we use the seasonality, because this company's been around for a while, and we want to see what they did last year, the year before, the year before, the year before, and then we want to compare it to what we think it's going to do this year. So if in the last 10 years this thing has a tendency to move down, and then in this week, I don't really want to get involved with it, because I'm not here to lose, I'm here to make money. Now this looks like it could have been a great trade at 64, because that would give us a nice return. 360. Oh, that is over a 50% return, because you're putting 661 into it. All right, and if it stays above the 96, that's a 50% return. 50% return for the week if it stays above 96. Now, I'm not going to do it, and I'm not going to suggest anyone else do it. I can't tell you what to do. But that being said, because she has a tendency to go down this time of year, I don't want to get into it. So much for that 50% trade. Boo. freaking who. All right, so who's next? Next on the list is my man Hank. Come on, Hank, sing that song, jig it out on him. All right, ACN. What does ACN look like this time of year? ACN. We got 10 days for the ACN to hit the mark. ACN starts out at 117. She trades between 115 and 124 for, oh, what is this, 9 months? 10 months? And then she tries out 129 for about a month and a half and tries out 135 for a month and a half, which is where she is today. Dividend coming up next week. She's on a little bit of an uptrend, a nice little upswing after some profit taking. So let's see what ACN has to offer. ACN. All right, before we do that, let's check out the seasonality for ACN before we can go any further. And then we can find out exactly what that's going to do. And here we go, right here. She seems to be following the trend very nicely, doing exactly what she did this year as she did the last previous years. So let's take a quick look. Now this I like because this is plain to see. It's nice and sideways. So when you're going sideways, that means if the stock stays the same or goes up, then we're going to make money on that one. So we are going to jump in on ACN at 36, 136. There we go. Ooh, 68. I like that. 135, 136. Let's see what we're looking at. All right, 1600 of the 34. That's just slightly under 50%. And it got rejected because I need to get rid of my crap first. Oh, so anyway, we got 1 minute, 2 or 3 minutes before the market opens. So let's find out where the market's going to open first before we do anything. All right, let's take a look at our trades over the year. The biggest loser we have Goldman Sachs. Now I'm bouncing all over the place only because I got nothing else to do for the last 2 or 3 minutes before the market opens because I can't do any trading because my account is tapped out. I told you I can't trade anymore until we get to where we want to go. Now we want to do ACN right where she is. But let's take a look at some of these losers so we can turn them around and hopefully turn out to be winners. Now AT&T, we're at a loss at 1300, but we have a nice position of AT&T. So you're going to hear the bell any second now, and as soon as the bell opens, we're going to find out exactly what is going to happen. All right. This account has no available buying power. Yay. Thank you. I already knew that. All right. Rejected. All right. Create a duplicate order. Now, let's just sit here, bide our time, because the market, oh, wait a minute, the market's not open today. Oh, it's a holiday, so we're going to have to sit tight and do this again tomorrow. Or are they open today? I really don't know. Yep, there you go. Sold, 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 sold. What hasn't sold? DG. Why didn't DG sell? Okay. Why didn't DG sell? Oh, DG gap down. Oh, there it is right there. Oh, come on. We got 1 penny for DG? Really? That's no fun. No fun at all. All right. We got a profit of $900 on DG. All right, I can live with that. All right, let's check out ACN. ACN was the one that we were going to do. Confirm and send. God, what did ACN open up at? I probably should check that out. Okay, love it. ACN did open up nicely. All right, let's look at CVS. CVS. All right, CVS opened up at 77.14, which is higher than the close. All right, but it's not something I'm looking forward to. Thank you very much. What else? CVS, we didn't get to do that in Lowe's. Take a look at Lowe's. All right, Lowe's opened up at 82.09, and what do we have Lowe's at? 82. All right, let's take a look at Lowe's. Back to single on Lowe's. I can sell the 82s for 63, which is a lot higher than I sold it for. But if I sell the 82.50s, I'm actually getting 82. So let's do that. And we only have 2 of these. All right, so I sold them at 57. So 82.52. I sold at 87 cents, which thank you very much. 87. So we add 87 onto the 82.50. So that's 83.32, something like that. So that's a lot better than what I could have had. All right, so we got quite a bit. It jumped up to 67. All right, love that. So let's jump in and see what we can do, see what kind of havoc we can wreak. We did EOG. Wait a minute, no, we weren't going to do EOG because it's in a downspin this time of year. So let's look at APA and Colgate. APA starts out the year, they're at the 63, 64 area, finds the high of the year at 68.93. Okay, falls down to a 50 area for about 5 months. And then from there, finds the low of the year, tests the water at 38. And bounces off that to settle into the 45 area. So let's take a quick look. The seasonality for APA. We got the dividend coming up next week. All right. We might want to get this on tomorrow or the next day, maybe even Wednesday or Thursday, because this moment in time she's not looking favorable. All right, so much for APA. Colgate Palmolive, let's see what they got for us. Okay, Colgate Palmolive is in a sideways market, which is good. Let's see what the regular chart looks like. Regular chart looks like she starts out the year right around 72, quickly falls to the low of the year, travels 65 area for about 4 months, jumps back up to 72, 73, and travels the rest of the year in that space. Now, she's at 72.67. The last couple of weeks, we did quite a bit with Colgate Palmolive, but we got 1 more week to trade Colgate in order to see if we can make any money off of it, or any more money off of it. So let's look at CL. CL seems to be going sideways for the rest of the week, so that's good. That gives us the opportunity to make some money on it. We're looking at the 72.50s right there. 72.50s at 42. Now what we could do is we can offer the market maker 40. That would give us about a 25% return. All right, yeah, it'd give us a 25% return. So let's give that one a quick little try and see if that goes. She may not. She probably won't because of where she is at the moment. If not, we can check into that again. But where were we? Okay, Colgate. APA and Colgate, we did those. And I think we only have 2 more to look at. Yeah, CVS, which we have positions in, and Lowe's we have positions in. All right, so CVS. We're looking at them to recover from yesterday. She opened up a little higher than the close, but now she's dropping down to 76.55. All right, 76. So CVS, 76.50. That can't be right. 27 ain't happening. But let's see if it is. Holy cow. We did buy CVS at 27. Now, hopefully by the end of the week she should even out. Let's see the seasonality for CVS. I'm pretty sure favorable this time of year. Yeah, it's right here. She's going to go up a little bit and then down a little bit, so she should be right. And the next week, 10 days from today, which is the 13th, right there, should be a little bit lower, but we're already into it. But next week, she pays out the dividend, then right after she pays the dividend, she jumps up. So we could recover some more money on that after she pays out the dividend. All right, that's CVS. We got one more to look at, and that's Lowe's. LOW, and that's going to be it for us today. And we're going to need to be rolling on out of here. Lowe's is going to go sideways, so let's see what Lowe's has to offer for us today, because we have 1 week. Oh, actually, we got 2 weeks for Lowe's. Lowe's at 82 even. All right, so jump into 80. All right, let's see if they're going to give it to us at 40. Okay, we're looking at the 80, 50, 81. Now she's at 82, so 80. I don't think that's going to fly. They don't have an 81.50. Wow. All right, let's give that one a try. Send that one off. That looks like a 25% profit potential, so we'll look at that one. That looks happy. All right, she's at 82. So should we try the 81.50? Let's give that one a try. Not traded. 81. 82. So let's give that one a try also, and let's see what we're going to do with Lowe's. Oh, that's a little over. That's over 50% return. Okay, so over 50% return looks good for Lowe's. We have quite a bit of positions for Lowe's now. Now Lowe's, where are we with Lowe's? Let's go back, do this alphabetically. Moving on down. Wow, we got quite a bit of trades. Come on, keep going. Let's just grab it and pull it. HHAKL, and here's Lowe's right here. All right, so we're in the profit with Lowe's at 1,400. So we made 1,400 off of Lowe's for the year, and we got a couple of positions in the Lowe's, which is tying up from 13,000. All right, all that being said, let's take a look at activity and see what's going on. Wow, we got 10 fills already this morning. Oh, okay, I'm trying to find out why we have this one right here, the 82.50, because we have 200 shares of those, so we're selling the call. We're going to go over all this. You know what? Let's go over it right now. See if we have any questions first off. No questions. Gotta love it. All right. So this is all our positions. We got 10 fills. We got Lowe's, CVS, Colgate-Palmolive, ACN. We just got rid of Dollar General, Verizon, AT&T, and Oracle. ACN. We did end up getting into ACN. All right, great. All that being said, this is James. We're going to be checking out for today, and hopefully we'll be catching you guys later on this afternoon, if not first thing in the morning, to find out what else we got cooking for us this week. So we have our 1, 2, 3, 4, 5, 6, 7, 8 positions. And with that being said, 8 positions, and we're going to take we're going to regroup later on tonight to find out where all this settles in, and then tomorrow we're going to do this all over again. That being said, this is James checking out from Dividend Stock Talk, and money makes life easier, and there's just so many things out there you can be doing with your money. Anyway, I'm out of here. I'll catch you next time. Hit me with the questions, like the video, sign up for the to use our software. You can get returns like this. We shoot for 1% a year. 1% per week. That is our main goal here trading this account. The other accounts we want to double-digit returns for the year, which can be anywhere between 10 to 20 to 30%. But that all being said, this is James checking out from Dividend Stock Talk. You guys have a great day, and I'll see you next time.